This episode of the What the FinTech podcast is sponsored by CSG. Hello and welcome to another brand new episode of What the FinTech, the podcast from the team behind FinTech Futures and the Banking Technology magazine. My name is Paul Hindle, editor of FinTech Futures, and for this episode we're joined by Richard Ullenius, Vice President of Global Banking and Financial Services at CSG. Richard, welcome to the show.
Thank you so much, Paul. Great to be here and see you again.
Excellent. Yeah, great to see you again as well, and great to have you on the show. Just to get started, we'd like to quickly let us know a bit more about yourself and CSG then.
So Richard Ullenius, based in Sweden, as you've already said, around the banking and financial services industry at CSG. CSG, big company in some of the underlying technologies for helping a variety of different industries build an improved customer experience, help customers monetize the engagements that they have. We support both retail businesses and kind of business to business as well. Banking and financial services is a growing space for us. We're really working globally now with everything from your traditional big banks to your smaller regional banks to some of the more up and coming fintech players and neo banks as well, and really focusing to help them evolve their business architectures. And as I already said, primary focus is to develop richer engagements with their customers, whether it's consumers or businesses, and also help monetize the different engagements that they have in a somewhat different way compared to how banks and some financial services companies have done it in the past. So that's a little bit about me and what we're doing at CSG.
Excellent. Yeah, sounds great. And again, great to have you here. And thanks so much for taking the time out to speak with us today. So on the show this week, we'll be exploring why the next era of banking demands reimagination rather than incremental transformation, and the defining factors that will set leading banks apart over the next 5 years. In particular, we'll discuss how trust, risk, and human judgment must evolve in the age of AI-driven banking models and real-time banking, how trust can become a competitive advantage for financial firms, and how risk and compliance can act as enablers of innovation rather than constraints. We'll also dive into the critical balance between human judgment and AI automation empowering responsible banking, and how regulation can also help spur innovation amid the rapid evolution of technology and shifting consumer demands. So to start off then, Richard, as you mentioned, we spoke recently at Sibos about the need for banks to shift from a product-first mindset to a customer-first one. What would you say today's customer wants from their banking experience?
It's a good question. I think what we've seen now for a number of years is an acceleration of the expectation from customers, whether they are consumers or whether they are businesses, that the relationship and the experience you have with your bank is quite different compared to what it's probably been over the last 10, 15, 20, 30 years. And I think it doesn't, as I said, it doesn't really matter whether you're a consumer or business any longer, right? You want that seamless, frictionless engagement with your bank. You want it to be holistic. You and I talked at Sibos about in the past, a lot of the financial services that we've been getting as customers have been very product focused. They've been around the particular product line or particular product that we might have been buying. And I think the consumer side of it has, of course, transformed quite quickly over the last few years. On the business side, I think there's still a lot of transformation to take place so that as a business customer, you start to get basically one bank, one financial services engagement with your provider. And I think the third element of it is that it becomes much more real time. For many, many, many years, the service has been provided on weeks or months. And I think what we're seeing with the incoming neobanks is they provide the service within seconds, which really starts to change the expectation on the customer side in terms of the relationship you want to have with a bank. And again, I'll say it again, it doesn't really matter whether you're a consumer or a business. It's going to go real time.
Excellent. And I mean, many banks are still investing heavily in digital transformation, but outcomes are often falling short in some cases. I mean, why do you believe the next era requires that reimagination of banking then rather than another transformation program?
So I think, if you look at transformation over the years, a lot of that has been to build efficiencies. It's been to create kind of improvement in how a bank or a financial services company operates. I think what's happening now is an opportunity for the bank to really reimagine the role that it has in the ecosystem. And in the past, as we talked about, they've been providing different kind of services, different kind of products, and they've been set up in a very specific way within the bank. The bigger the bank, of course, the more products you have and the more silos you have. I think what's happening right now, with also the expectation from us customers of a different type of an experience, is that it requires the bank to take a customer-centric approach to the role they actually want to play with customers. And a big driver for that, therefore, becomes how do you actually start to bring together the different services, the different products that I want to provide to a customer, again, whether you're a consumer or whether you're a business. And again, I think we're a bit further down the line on the consumer side, where a lot of the big traditional banks are starting to roll out much more improved kind of digital online experiences for its customers. But on the business side, we have a long way to go before you can see those type of similar digital engagements where a lot of your different banking services are coming through in a similar channel. So I think a big part for me, therefore, means that it's not just another transformation where you're putting new technology in place, where perhaps you're changing your processes or you're shifting the way that your teams are working. This, for me, is it's an underlying DNA shift. It's really reimagining what role are we as a bank going to play for our customers? And based on that, how do we then best bring together the services that we want to provide to our customers? And then based on that, you then start to reimagine how should we operate that? What technologies should we use? What's the mix between AI and the human workforce? And also then, what does that mean in terms of all the different data that we need to be able to serve those customers in much more of a holistic way compared to the previous operating model that was very product specific? We could feed those product processors, those product teams with the necessary data. This is about figuring out how you actually get more holistic data to those who serves the customers. And as we just discussed, you got to do that in real time. And that's going to be one of the big challenges. And that's why I think it's more than a traditional transformation. This is a cultural revolution, a cultural shift that's going on in banking.
Yeah, and you mentioned there, in an increasingly real-time and AI-driven banking environment, trust is becoming a huge factor now for customers as well. How should commercial and institutional banks think about trust as a source of competitive advantage rather than a given?
Yeah, I think the traditional banks, this is one of the major opportunities to create or continue to build competitive differentiation and an advantage compared to those who are starting to come into this space. I mean, I think personally, Paul, I don't know what you think, but I think the lines between what's real, what's potentially not real, what's AI, what's human created, just generally speaking, the lines are blurring. And if we're also thinking that things will become much more real time, you and I as consumers, or you and I in a business, we are, in my mind, going to be looking for a set of key parameters that determine who we do business with. And I think one of the key characteristics or parameters that we will look for is certainty, consistency, and also trust. You need to be able to trust, where is something coming from? Am I being served in the right way? Is this organization doing everything it can to take care of my needs, take care of what it is that I need? So I think this kind of blurring of the lines that's happening right now in the world, and also the whole real-timeness, is going to increase the demand from customers of trust, legitimacy, and transparency. And I think that's a huge opportunity for the traditional banks to be that real trusted provider of services to corporate institutions, but also in the SME space as well. But I think doing it the way they've done it in the past, that isn't going to work. It's going to be too slow. It's going to be too cumbersome. It's going to be too fragmented. It's going to be too siloed. So figuring those two things out at the same time and being able to execute on that, that's a huge opportunity for the traditional banks, I would say.
Excellent. You've touched on things there, but what role does transparency play in fostering that trust in an AI-driven banking models? How can banks ensure customers understand and feel confident in the technology being used and ensure that AI systems are free from bias and align with ethical standards as well?
Someone probably said it before, but Ray Dalio said it really well in one of his books. We're moving into a world of radical transparency. And I think there'll be big parts of the world that'll be black box. It'll be like you won't be able to kind of get into that box. You don't know what data they're holding on you. You don't know how that data is being used. You don't know what the total relationship you have with the provider. It doesn't matter whether it's financial services or something else. You just won't be able to do that. So I think this is a huge opportunity also for all types of financial services organization. Now, it probably depends on how you want to compete, but I would suggest that, again, in the business banking side, so corporate and kind of mid-market and down to the SMEs, I think it's a really good opportunity for banks to establish this kind of very transparent relationship with its customers, where it basically opens up the different data streams that it has, both in terms of the customer's data, but also the data that it's using to build and provide services to those customers. Allow the customers to see that and allow the customers to actually co-create and co-develop solutions together with the bank. I think in the past, again, a little bit like what we talked about at Cybos, but also here, where it was very product focused. It was like, hey, we are the bank, we are building, developing products, we take those to a customer. And if we win the deal, the customer will buy the service from us. I think those days, as we talked about, they're going. And in this new customer-centric world, it's an opportunity for banks to reimagine how they actually also build those products and actually often probably do it with the customer. You might very well have a framework capability, but then as part of a deal that you're doing with a large enterprise, 30-40% of exactly how that product and how that service is set up will actually be designed and developed together with the customer. To do that effectively, you need to have that kind of radical transparency mindset where you're opening up the data for the customer. And I would also say vice versa, Paul. Customers need to bring their data to the bank so that the bank also has insight into how the company operates. That will create a very trust-based and transparent relationship between a bank and its customers, where the bank's relationship with the corporate or the business also evolves a little bit from a provider of financial services, products and services to becoming much more of a business partner, which, of course, at the end of the day, if that works out well, drives much bigger loyalty on the customer side, because most of us are looking for those kind of proactive partners who really focuses building their business around our needs. So that, again, I think is a big opportunity for the banks. And I would probably also stick my neck out a little bit and say those who don't operate in that way, those who kind of continue more black box, I think they will probably struggle a little bit more and their businesses will probably be a little bit more transactional. That'd be my view, at least.
Calling all payment pioneers, the PayTech Awards are officially open for nominations and we want to see you shine. This is your moment to celebrate your brilliance and show the world what you've achieved. But don't dawdle, nominations close on the 13th of March. To join us, just search PayTech Awards and get started.
I mean, I guess focusing on AI a bit more as well. I mean, as that becomes embedded across pricing, risk and decisioning, where does human judgment remain essential there? And how should banks strike the right balance between automation and oversight?
This is, of course, the holy grail type question. If we take a look at what's happening right now with AI in banking and financial services broadly. And in my mind, we're going through we're in stage 2. Stage 1 was very much like play around with the LLMs, see what they can do. Can they build efficiencies? Can they help us with research? Can they start to support us with analysis for decision making? I think right now we're in stage 2 where, and I was reading an interesting article about one of the big banks here this morning that's spent the last 6 months building out very specific models now for performing end-to-end tasks. So where they've had human workforce performing some of those tasks, they're basically going to replace those with an agentic workforce. And then back to your question was, what I'm seeing is that you'll then have human in the loop. The humans will still participate, checking, tuning, tweaking, providing oversight and guidance in some way. So I think that's the stage we're at right now, especially with those banks and financial services institutions that are leading the way in this. I think the third stage is the one that's really interesting. And in my mind, the third stage, and here's where banks have an opportunity, corporate banks have an opportunity to transform in a different way compared to many other industries. I was sharing at the beginning, CSG has spent the last 40 years helping a variety of different industries transform. One of them is the telco industry. I think on the telco industry, they started a similar type of a transformation about 10, 15 years ago. And what happened was telcos needed to become really good operators of technology. And of course, banks have tons of technology as well. But those technologies that really connect the customer experience all the way down into payment systems, as we discussed, pricing capabilities, all the way into kind of charging and billing systems. And then they've perfected that over the years. I think banks have an opportunity to kind of almost like shortcut some of this. So in my mind, the third evolution that we are likely to see with AI is where, if you think of it as a three-layered cake and you have customers at the top, and I'm specifically thinking here about corporate and institutional customers, you have customers at the top, you'll then have the human workforce kind of in the middle. In my mind, the human workforce, to 95%, they will be focused on doing what they do best, which is servicing those customers, building the relationships, developing business, and generally speaking, acting as business developers, constantly working to grow the customer's business and hence creating loyalty, growing the bank business. And then underneath that, you will have an agentic workforce of different sorts. You will have agents basically performing a lot of the underlying tasks that today it takes tens, hundreds, thousands of people in those banks doing. And you asked me a little bit about the pricing. Take pricing, for example, right? So today, the way a bank does that, you go out, you have a negotiation with the customer, you bring it back, you do pricing in a variety of different ways, you push some sort of an approval, you go back to the customer, you do renegotiation, and then all of a sudden you have, hopefully, if you won the business, you got an order, and then something is pushed down to fulfillment, and then of course into different monetization systems. That's pretty fragmented, pretty big, pretty complex processes in a bank with lots of people. And I don't know what the time frame is, Paul, but probably not too long. You'll probably just have, hey, I've got a product bundling agent that I talk to in a natural language interface. And then I have some sort of a pricing agent that, again, I talk to. The pricing agent is fully capable of pricing based on the relationship, takes all of the different dynamic aspects like interest rate changes into account. And then you have a variety of different agents that basically gives the banker an autonomous end-to-end orchestration of a workflow. That, for me, is where I think it's going to go pretty quickly. And that's where it starts to become really, really interesting. And you really then start to think about one of the things we talked about earlier, which was you're really reimagining what is it that a bank does with its customer? How do we serve those customers in a customer-centric way? And then how do you create a workforce that the bankers, the humans, they focus on customers, and then you basically have agents focusing on running a lot of the workflows and orchestrating those internally. That at least is kind of where I'm thinking that it's going.
Excellent. Yeah. It'll be interesting to see just how short that timeline might be for that. But like I say, it's exciting times to be going forward. I guess on the AI front, then, what are the best practices for implementing an effective AI and human model then in banking? And how can banks ensure a smooth rollout that balances innovation with, as we've been discussing previously, trust, transparency, and employee buy-in as well?
I think three things are super important here. First of all, the risk is that banks, financial services institutions, and many other industries, you cannot we know we have to get into AI, you pick different use cases and you just start to build things and you grow and you see how you go. And I love that kind of pragmatism, and you got to have some of that. But this is where I think you need to have an understanding of the business model, the future business model you're driving towards. And it goes back to that customer-centric approach, right? So this is a very interesting opportunity in time for many industries, including banking and financial services, to reimagine, as we said, what they actually do for customers and who they serve and with what. And it's a mind-blowing opportunity to do many other things that banks today probably don't do. But you need to have a perspective of the business model that you're driving towards. And then underneath that business model, it is therefore very important for you to understand what is therefore the business architecture that we are putting in place. What organization do we need? How does that organization blend between humans and AI workforce? What are the different processes that are required? Which of those processes or workflows are going to be performed, as we discussed, by AIs? What level of control do you need from a human? So on and so forth, right? So it's super important that you have an understanding of your business architecture. It doesn't need to be 100%, but I would argue probably 70 to 80% you want to have that understanding, because that will help you with the sequencing of the investments that you're making. And then, of course, at the end of the day, the operating model that you're trying to get to is of utmost importance as well. And I would strongly argue that all those three, your business model, portfolio, your business architecture, and your operating model, those three need to hang together. And the spine through all of those three should really be a customer-centric approach to how you create that holistic engagement with your corporate and institutional customers, where you're starting to bring together the different services and the different products that the bank offers in a single holistic engagement. And then back to the thing we started this conversation around, you got to be able to do that in real time. No question about it.
Excellent. Yeah, and I mentioned in the introduction as well that risk and compliance are often seen as constraints on innovation. How can banks redesign these functions to move faster while actually strengthening resilience and control?
This is an interesting one. I mean, AI and technology developments are likely to move faster than the regulators and the regulation, at least until we have AI agents that perhaps does some of the regulation. So I think if we go back over the last 5, 6, 7, 8 years, banks have just been inundated with new regulation coming at them, right? And it's of course super difficult for the bank to constantly try to improve, constantly try to develop its business, looking at customers, but then need to keep an eye that way as well to see what are basically the boundaries. So I think this is another one where the banks have an opportunity to reimagine how they do things. We've heard the concept regulation by design. I think that's going to become one of the key themes. I think it's an opportunity for the regulator and the banks to develop a totally different relationship compared to what they have today. I think some of the regulation today that needs to go through different legal hurdles, etc., it might very well be that the regulators themselves, they also have to operate in a slightly different way, which means they might not be able to get through 100% of regulation and then release it and then expect banks to implement it within a very short period of time. That kind of approach and process becomes really difficult. So it might force a different partnership between those who regulate and the banks and other financial services industries, where actually they design a lot of the regulation together. A little bit like what we talked about, co-creation solutions between the bank and customers. Bit the same here. Regulation might need to be designed much more in real time, might need to be designed a little bit on the fly. And it might very well be that banks and financial services organizations today are often recipients and then reactively need to execute on regulatory changes, etc. But it might be that it's much more of a proactive feeder of information into the regulators, and you create much more of a tighter partnership between the two, where some of the regulation is likely going to need to be implemented in minutes or seconds, which means you need to have a very different approach to how you're thinking about that business architecture that we talked about, and you need to be able to make changes in real time. So if there is one that kind of keeps coming back to us throughout this conversation, Paul, is the banks need to move from days, weeks, months, quarters in their operating speed. They need to be able to operate in real time, which puts enormous pressure on how they're thinking about the business architecture. And it's not just a technology thing. This really is about how tech, processes, workflows, and of course, the mix between human and AI workforces come together to create a real-time organization.
Excellent. Yeah. I guess moving forward then, what are some of the most exciting opportunities for banks to reimagine their business models in the AI era, maybe beyond traditional banking services as well?
In my mind, three things. If we just stick we start off in kind of the traditional banking and financial services portfolio today, I think it opens an opportunity, this is a double-sided coin, of course. The traditional business model is you basically charge for a service, you charge for a product, you charge for some sort of a consumption, same as many other industries. But I think it's an opportunity to actually start to have much more of a value-based relationship with your customers. It is an opportunity to actually charge for outcomes. And that's something we're seeing now happening in many other industries, where take legal, for example, where you paid for the hour for the lawyer, etc. And you still do for many of the lawyers, but legal side is moving much more towards outcomes, and many other industries as well. So I think if you just stick in the banking and financial services portfolio, it's an opportunity, more than a threat in my mind, for the bank to actually participate in the value and the outcomes that it helps to create, especially those banks that become true business partners, which should be a bigger upside and it should drive the bank towards doing much better, much more growth-oriented deals together with their customers, where the focus is less on fees and it's much more focused on actually what value am I really helping to bring to the business. And if I help that business realize that value, then my takeout from that, it's actually much bigger than just the fee income. So I think that's one opportunity. The second opportunity, which there's a lot of discussion about today, the neobanks, of course, and some of the fintechs, but not the least the neobanks, are starting to perfect this, which is we've thought of the banking and financial services portfolio in quite a similar way for many years. And what I think the neobanks are really good at is, well, actually, at the end of the day, I'm servicing a customer, consumer, small business, big business, whatever it is. And why do I need to limit myself to the traditional banking products? No names mentioned, but we all know that some of the neobanks are starting now to venture into other verticals almost, or other industries. The communications industry is one, the IT industry is probably another one, the insurance industry, okay, super closely related, of course, to banking, right? But they're basically thinking about it from that customer-centric view, which is my job is to create an extraordinary experience within a set number of fields, of course, for that customer. And what other products and services would that customer therefore be interested in buying or consuming more and more from me? I think that's the other opportunity for the traditional banks to kind of catch on to that. I think, on the retail side, it's already started, but I think on the corporate side, it's slowly starting. I think banks have an opportunity to kind of press the accelerator on that a little bit and start to explore what would the opportunity be around bringing different ecosystems of products and services to our corporate and institutional customers. And then again, what kind of capabilities do we need to be able to manage that? But for me, that then goes straight to what we talked about as one of the big opportunities right now with everything going on, which is you're constantly enriching the services that you're providing to your corporate customers. Some of them traditional banking and financial services products, no question, but some of them might very well start to be adjacent. And again, driving more of a business partnership with your customers that we know we've done well drives loyalty. The last piece is where we're going with AI, which is large companies are already moving towards agentic procurement processes. It is very possible that banks, corporate and institutional banks, will be servicing agents. We're potentially talking maybe a few years out, but I think that's the other thing that banks shouldn't lose focus on either. That a lot of what we're talking about today is how do I serve a customer better? How do I bring more products to them? And we're constantly having that. It's a human that I'm working with on the other side in corporate and institutional banking. But I do think with the speed of agentic commerce that is starting to build up, not the least on the consumer side, but I know a number of companies that are already working on buying teams, procurement teams, legal teams that will, to a large degree, be made up of agents. I think that's another paradigm that the banks do need to start to think through. How would we actually serve customers that come at us and want to buy our services and products with agents instead of humans? So that for me is the third one that I think it would be good for the traditional banks to think through and see what they can do to actually create a differentiation compared to their competitors there.
Thanks again, Richard, for chatting with us today. To close out the podcast, we have on our infamous FinTech Jails. This is where we ask for an industry term, buzzword, or trend that you've seen or heard enough of. Or, of course, you can advocate to free one of the previously incarcerated terms. So what would your selection be for this week?
I'm going to pick one of the ones that you have on the list already, Paul, and it's agentification. Not because it's a bad word or anything like that. We've talked a lot about that throughout this conversation. But my spin on it, my take on it is, at least for the foreseeable future, this isn't about replacing humans with agents. This is about reimagining the role that humans should play in a bank and the role that AI agents are rapidly becoming really good at doing. And as I said, in my mind, the picture I have in my head, works on pictures, is that kind of three-layered cake. You got customers at the top, you got humans that are constantly focusing most, if not all of their energy on what can we do to grow the relationship with those customers? How do we better serve them? And they are then super supported across the workflows that they need by an agentic workforce. So I don't know what the right word is, Paul, but I think it's much more of a harmonious organizational design between the human and the agent AI workforce. That at least is my perspective on where things are going.
Excellent. Yeah. I feel like agentic AI is going to be one of those words that goes in and out of the jail quite a few times larger, because there's so many good use cases for it. But like you say, because it's everywhere at the moment. People see it in almost every other. I mean, I personally get so many press releases into my inbox. At least every other one has something about agentic AI in there, it seems like these days. But for now, like you say, you've made a very good argument there. I'm happy to free agentification from the jail this week, and we will see you later down the line if anybody wants to.
Back in a week or two. But I think, and what you were talking about there, Paul, as well, just jumping in for a second, I think you're right. Right now, so many companies, doesn't really matter which industry it is, you kind of focus on talking about the agentic workforce or AI. I think the time will come pretty soon where people are kind of tired and fed up with that. And instead, everyone will be talking about the outcomes that it's creating, preferably the outcomes for someone's customers, but of course also the outcomes that's generated for the business. So I'm hoping that the focus of the conversation will evolve quite quickly.
Excellent. Sounds great. Well, no, it all sounds very good to me. Like I say, I will free agentification from the jail this week. And Richard, again, thank you so much for joining us for the podcast today. It's been a pleasure.
Lovely to be with you, Paul, as always.
Well, that's all we have time for this week. Thanks, of course, to Richard for joining me. As for FinTech Futures, you can find us online at fintechfutures.com, and be sure to follow us on LinkedIn to keep up with all the latest fintech news. If you like this podcast and our other episodes, you can subscribe on Apple Podcasts, Spotify, SoundCloud, or your favorite podcasting service to get notified about future episodes. Thanks as well to Arama for editing this podcast. You can check them out at arama.tv. As always, thank you very much for your support, and we'll see you soon for another episode of What the FinTech. But until then, goodbye.